It isn't the most popular company on the market, but I think Alphabet is really the best big tech stock right now because it's so well positioned for the next decade of growth. And it isn't just about search. I think search is going to be a business that does just fine in the future. Typically, when there's technology changes that happen, whether that's from mobile or artificial intelligence, the old business doesn't die. People didn't stop using PCs. When broadband came along, people didn't stop paying for dial-up internet. It took a decade or more for that business to ultimately die. So search is going to be just fine long term. But what I think is ultimately going to drive Alphabet and the stock going forward is the growth momentum of a couple of businesses. In particular, Google Cloud, which I think is really well positioned in artificial intelligence, as well as the potential from one other bet in particular, and that is Waymo. So I'm going to dig into what you're getting for the core business, because I think that's the way to think about Alphabet as a stock right now. You're getting the core, search, YouTube, all of these businesses that are still growing, by the way, but maybe not growing at 20, 30, 40% a year like they used to, but they're still very, very profitable businesses. You're getting those for a reasonable price, and then you get upside from things like the cloud and Waymo. So that's the way to think about Alphabet stock today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the core business and just give some numbers around what you're paying for right now. This is a look at Google search and other revenue, and then YouTube ads revenue. This isn't the entire kind of legacy business segment. They also have network and other revenue, but these are kind of the big revenue buckets for Alphabet. And then I'll show why this makes sense when I break down their operating income. But you can see that these businesses are growing long term. This blip in growth that you see in 2022 and early 2023, that was in large part because of Apple's app tracking transparency changes. You used to be able to track a click on something like Safari or on YouTube from that actual click all the way through a purchase, so you could attribute whether an advertisement was successful or not. That was broken when Apple instituted app tracking transparency. Alphabet and Meta were the two biggest companies impacted by that, and that's why revenue growth stalled, but you can see that we're back to revenue growth again. Now you go to operating income. You can see that operating income on a trailing basis has doubled since September 2020. So just a phenomenal growth rate long term. You can see that you see similar changes to the margin profile when app tracking transparency was instituted, but we're now back to growth in the core business. Now, this includes operating income from search, from YouTube, from the network. So the way that Alphabet reports things is they have different segments on the revenue side, but then don't break out the same exact segments on the operating income side. So they kind of bucket all those things into one piece, and that is what you see in this chart. But the reason that this is important is because on a trailing 12-month basis, you get about $100 billion worth of operating income. The enterprise value of the company is a little over $2 trillion. So if we just take those simple numbers, the enterprise value divided by operating income is about 20x. That's a pretty reasonable multiple for a company that's as big and profitable as Alphabet is. But that's not all you're getting with this company. You're also getting cloud and Waymo. We can start to put some numbers behind the cloud right now because they do break out the cloud numbers both on a revenue and operating income perspective. And you can see exactly that right here. The Google Cloud revenue compound annual growth rate of a little over 36% in the most recent quarter grew in the high 20% range, and it just turned profitable. Just now reaching operating income profitability, $2.4 billion in operating income over the past 12 months. But this is a business that could potentially grow for a decade or more. And when I talk about there being tailwinds behind Alphabet stock for a decade or more, this is what I'm talking about. It's possible that the cloud business grows 25% compound rate for the next decade. If it does, that would be a $328 billion business. If it grows at a 30% compound rate, which is maybe not likely, but possible, that would be a $485 billion business. We're also going to see that operating income number go up. Right now, it's in the high single digits. We're probably going to see that ultimately end up between 20 and 30% long term. But this is going to take time. I think the playbook here for Google Cloud is going to be AWS. in the early 2000s, AWS was started, but it wasn't until the late 2000s that the mobile era began. And it was AWS that really enabled a lot of startups like Snapchat, like Netflix, like Dropbox to scale their businesses to much larger numbers without having to build their own servers. We're going to see the same thing with artificial intelligence, where startups aren't going to want to develop their own models. They're going to use the number of models that Alphabet has available, including open source models and their proprietary models. They're also going to use their cloud infrastructure. That cloud infrastructure has been developed over 20 years to serve searches in the best and fastest manner possible. So I think this is going to be probably the most effective cloud. And you've seen that if you've used something like Gemini. I think it's the fastest chatbot that you can use when you compare it to something like OpenAI or even Meta's infrastructure. So that's going to be a potential growth avenue for them. And I think that will last for a very long time. So that alone, even if just the search business and YouTube are just steady as you go, you're getting those for reasonable multiples, and you get this growth from the cloud, and that could compound at a really rapid rate from a now very sizable base over the next decade or more. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But let's also not overlook Waymo. Now, there are plenty of questions that I have about Alphabet's business model when it comes to Waymo. These cars are pretty goofy looking, and they're not making a custom car the way that something like Zoox or Cruise is. But I think they arguably have the best technology in the industry, and they're partnering with Uber. So do they eventually spin off the Waymo business and just merge it with Uber? That may make a lot of sense, and that could make both of those companies more valuable. There's a lot of different options for where they could go long term, but I think the pace at which they're rolling out, this is the Phoenix map, this is their San Francisco map, so a huge part of San Francisco. These are the areas in Los Angeles where they're operating, and then they also have a presence in Austin, Texas as well. So really scaling the business in these smaller areas, but I don't think it's too hard to see how this could potentially scale to hundreds of cities around the US and around the world. And now they're putting millions of miles on the road every year, collecting more and more data and getting safety data behind that as well. So could this be a huge business long term? I think ultimately autonomous ride sharing could be a $1 trillion business for whoever can scale it globally. And Waymo is one of the 2 or 3 companies that is at the leading edge. So this could be ultimately a huge growth driver for the company, whether it lives within Alphabet or whether it ultimately gets spun off or merged with another company. So I think the great thing when you look at Alphabet stock is you could just look at the core business and what we know today, and I think be pretty comfortable with the valuation of what we're paying as investors for that core business, for YouTube, for Google Search, for the ad network infrastructure that they have. All of those pieces are very valuable. G Suite, all of those products, I think are very sticky and have a very bright future. But on top of that, you're getting upside potential from the cloud and from Waymo. And I think both of those businesses are going to ultimately be very valuable long term. So that's one of the reasons that I like Alphabet stock. It's why I own shares. I've been adding to it as well in the past because it has free optionality. And that is a great way to generate asymmetric returns, is when you're getting a value for the stock and you get the upside for free. But what do you think about Alphabet? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.